So 90 to 95% of world's oil is being traded in US dollar, right? So oil trade is equal to US dollar. So in today's video, we'll try to understand why oil is being traded in US dollar. Okay, but the very important thing which we have to discuss before entering into the details of why oil is being traded in US dollar is that what's the purpose of oil? What is the contribution of oil? So to understand the contribution of oil, we first need to look at some numbers. What are the numbers? Okay, in energy sector, oil contributes up to 30 to 35%. So oil in energy sector contributes up to 30 to 35%. But in transportation sector, oil contributes up to 90%, guys. So in energy sector, the contribution of oil is 30 to 35%, and the contribution of oil in transport sector is 90%. Second thing, natural gas, which is also traded in US dollar. Okay, the contribution of natural gas in energy sector is up to 27 to 30%. Okay, and this is also being traded in US dollar. So now we'll try to understand why is this the case. So to understand this, we have to go in 1974. Okay, so let's go to 1974. What happened in 1974? So in 1974, a deal between United States and Saudi Arabia took place. And what was the deal? The deal was simple, that you have to sell your oil in US dollar. It was the simplest deal, right? It was the simplest deal ever to take place. What was the deal? Well, you guys have oil, just simply sell it in United States dollar. And in return, we will give you some advantages. Now, what were those benefits? Now, those benefits were the reason why oil is being traded in United States dollar. And then the same deal which took place in 1974, that same deal was applied to other GCC countries. Now, what is GCC? GCC stands for GCC. GCC stands for Gulf Countries Corporation. Okay, Gulf countries. Now, which are those countries? Those countries are Qatar, Bahrain, Saudi, Kuwait. Okay, these are GCC countries, and they sell most of their products, and almost all of their exports and imports are made in US dollar. Okay, now we'll try to understand what benefits are they getting in return of selling their commodities, their oil, their gas in US dollar. Okay, now we'll try to understand those. So the very first benefit which they got was, so I'll not say GCCs or GCC countries. To make things simple, I'll just use one country, which is Saudi Arabia, and those same concepts, those same benefits will apply to other GCC countries as well. So for example, I'll be only taking to explain on the board, I'll be only taking Saudi Arabia. I'll be only taking the name of Saudi Arabia. Okay, so Saudi Arabia, what benefits are they getting? First one was their currency was glued to United States dollar. Now, what does this mean? For example, in 1974, I think in 1980, sorry. In 1980s, $1 was equal to 376 riyal. Right? In 1970s and 1980s, $1 was equal to 3.76 riyal. Guess what? In 2026, $1 is is the same. $1 is still equal to 3.776 riyal. Same. Why? Because in 1970s, 1980s, their currency was glued to US dollar. Their currency will not change. Now, if you, just to make things simple for you, just take your country. Let's say if you're watching this from Pakistan, if you're watching this from India, you're watching this from Mexico, $1, let's say in 1980s, was equal to let's say 30 rupee, right? 30 rupee Indian, okay, or like $1 was equal to, I think, $50, maybe $60. $1 was equal to 60 rupee Pakistani, okay? Well, today $1 to Indian rupees almost 100 rupees, right? Indian rupees. And in Pakistan's currency, $1 is equal to almost 300 Pak rupees, right? Just see the difference. Now, if you see these Saudi Arabia, their currency was actually glued. Their cost to dollar, their conversion to dollar stayed the same. Why? Because one of the benefits they got by selling their oil in US dollar was that their currency was glued to US dollar. Now, now, if let's say the currency was glued to US dollar, what benefit? Why is this so beneficial? Why? The first thing is inflation. Obviously, $1 stayed the same. If the inflation in the world increases, if the inflation on the world increases, it won't affect these GCCs. Right? Second important thing, one of the most important thing, why this acted as inflation buffer. I'll also explain inflation buffer in a minute. But second most important thing, second most important thing was profit. How is this profit? Like how did GCC, or let's say Saudia, made profit? Now, if you clearly look at it, they are selling $1 is equal to 3.76 riyal, right? So now, when they sell their oil in US dollar, they are making profits in US dollar. Now, what do they do with the profit they are making? Well, they invest some money in United States. Some money is invested in United States. Where are they investing this money? In real estate. Okay, in real estate or in businesses, or maybe buying some fast food chains. Okay, well, this is where they invest, or in stock market, okay. And well, when they invest their money in stock market, where do they invest? In tech companies. So the profit they are making by selling their oil in dollar, they are spending that money in all these sectors. Some of the profit. Well, where are they putting the rest of their profit? Well, this is a good question. They are putting the rest of their profit in their banks. So you will be like, okay, they made profit, right? They invested that profit back into United States, in stock market, in United States tech, in real estate, and all those companies. And then they then they put some of their money in the banks. Now, what's the benefit of this? Well, when the inflation happens, the prices of oil go up, what do? They take that money which they have in the banks and put it in market. And what does this do? Because look, there's inflation, right? They already have money in their bank. Instead of taking money from the pockets of people, they take that money out from their banks